Compounders, Brad here. So today I want to talk about Alibaba. So Alibaba hit my target buy price. I've done a few videos in the last month. There was 10 companies on my watch list. Alibaba was one of those, and then I did a video specifically about Alibaba. And it did. It went below my target buy price, which was $216. I think the day before Christmas, it hit $212. So, a lot of you have reached out to me asking, am I buying? It's below my target buy price. So I want to break that down for you guys, what I'm doing about Alibaba at the moment. First, I want to just give a little refresher on what really got me interested in Alibaba in the first place. I am a shameless cloner, okay? A big part of my investing strategy is to follow the best investors in the world and see what they are buying, okay? See what they bought in the last quarter, what they currently hold in their portfolios. I want to let them do the work, right? Let them find the great deals for me. So there's 4 great investors who either currently own Alibaba or owned it within 2020. Okay, and there's more than this, but these are the ones I really follow. So I've sorted it by how many shares of Alibaba they held at the end of the third quarter, which was the end of September 2020. You can see that in their 13F filings. So I created a little spreadsheet here. You see Daniel Loeb of Third Point has about 2.5 million shares of Alibaba. Appaloosa Management with David Tepper, 2.2 million shares. And then Bridgewater with, of course, Ray Dalio, 1.3 million shares. So then I wanted to calculate, okay, so how much value does that represent in their portfolio? So the price today on Monday, December 28th, was $224 at the close of trading. So I simply multiplied the number of shares at the end of the third quarter by the share price today to get this kind of current market value. Obviously, we don't know how many shares they own today. This is the latest information we have at the end of quarter 3. But this is the best estimate of kind of portfolio value for Baba for these investors. So you got 565 some million for Daniel Loeb, you got 497 million for Tepper, and just shy of 300 million for Ray Dalio. Now, one thing that's really important when you're looking at positions that these investors own in their portfolio is how much conviction do they have with these positions. And one way to gauge that, I think the biggest, most obvious way to gauge that is to look at what is that position as a percentage of all of the assets that they manage, right? And so this isn't just what shows up in these 13F filings, right? They could have cash, they could have bonds, they could be short positions. There's a lot of things they could have foreign stocks that aren't required to be disclosed through 13F filings. So we only get kind of a small piece of the puzzle in a lot of cases from the 13F filing. And a resource that I discovered recently on the Invested podcast with Danielle Town is a website called Advisorinfo Gov. Okay, I'll link to it in the description. But you can go to that site and you can, enter the name of a fund, and it will show you, the total assets under management. And usually it's like at the end of the previous calendar year or something like that. So I went and I looked up these funds, and I inserted, the total assets under management to get a sense, all right, how much conviction do these investors have in terms of the overall portfolio? So you can see here the conviction, it's really just current value divided by assets under management. So, about 3.5% for Daniel Loeb, David Tepper approaching 4%, Ray Dalio less than a quarter of a percent, but 0.2%, a fifth of a percent. So, pretty weak on the conviction. And but to be fair, I mean that's really Bridgewater's approach. They are big on diversification. They want to have eggs spread out over many, many different baskets. If you're just looking at the 13F, it seems like Alibaba is their fourth largest position. It's their largest single stock position. They've got like 3 ETFs ahead of Alibaba. But when you're looking at the overall total portfolio, it's a very small piece. Alibaba could go to zero tomorrow, and it wouldn't even really be a blip on the radar of Bridgewater. So that's that piece, the conviction piece. The next piece, what have they done recently, right? Did they add in the third quarter? Did they sell off some of the position in the third quarter? Because that gives us a sense. If we look at what the price range was in the third quarter, how attractive was, say, the low of that price range in the third quarter for these particular investors? If we saw that they added in the third quarter, it's safe to perhaps assume that the low price in the third quarter was a compelling price for that investor. Okay, so Daniel Loeb added 26% to Baba in the third quarter. David Tepper reduced it by about a third. Okay, so a sizable reduction in that position in the third quarter. Ray Dalio added 40%. Okay, Bridgewater added 40%. So that's a pretty big add. But again, such a low conviction with respect to the overall portfolio. So that's just kind of an overview of the super investors. One more, Li Lu did own Alibaba in the first quarter of 2020, but he sold out in the second quarter. So that's another data point. Li Lu is one of my favorite investors to just track his activity and get ideas based on what he's bought recently. So then the other data point here, the point I really used for my previous videos in terms of my target buy price was really just the low price in the third quarter, okay, where Daniel Loeb and Ray Dalio, they added to the portfolio. At the lowest they could have added is $216. I'm sure some of it was above that because they bought quite a bit, right? And they're not going to hit the low for that whole, multi-million-dollar addition to the portfolio, multi-hundred-million-dollar addition. So that was my target buy price, $216. Now, like I said, the day before Christmas, it got down to $212. And I got to thank you guys. I didn't have any notifications set. I didn't realize that Alibaba was taking a dive until many of you reached out to me. So, seeing that it hit my target buy price, I wanted to dig deeper. Is this a company that I'm comfortable owning, right? There's a reason the price has been dropping. Is that reason related to some, fundamental change in the story of Alibaba? Or is it something that's not going to impact the long-term growth of Alibaba? It's just kind of a short-term fear for investors where they're fleeing Alibaba, and that's causing a dip that could be a great buy opportunity. So I was digging in the last week or so, and I came across this video. It was actually recommended by one of you guys in my comments. Sven Carlin is a value investor that I follow on YouTube. About 2.5 years ago, he put out a video called China Stock, Scratching the Surface on Fraud and Misconduct. It's a great video. It's only like 10 minutes. I'm going to link to it in the description. Check it out. If you're investing in China, if you're interested in investing in China. But I wanted to share a few points from this video that I thought were, that impacted me, impacted my story for Alibaba and my interest as an investor in Alibaba. So first, he comes out and says, you don't own any business in China. As an investor outside of China, as a foreign investor, you're not actually an owner of the stocks that you're investing in, okay? And the reason for that, China doesn't allow foreign ownership in particular sectors, okay? This says for companies that are in the restriction category or the negative list. Now, the technology sector is one of those restricted categories. So it's essentially illegal in the eyes of the Chinese government for a foreign investor to invest in a Chinese company within the technology sector, okay? Now, Alibaba, I should say BABA, the ticker BABA, which is traded in the US, is a variable interest entity, VIE. And it's domiciled in the Cayman Islands, all right? So it's essentially this shell company that is in the Cayman Islands. It's an intermediary that provides capital to Chinese-owned Alibaba to the actual business of Alibaba, the operating entity. Provides capital to Alibaba through a contract that returns profits to this foreign-owned entity, this VIE, okay? And, you know, it's pretty obvious that this entity, this VIE in the Cayman Islands, was created to circumvent Chinese law, okay? Because it was illegal for foreigners to own a piece of Alibaba. So up pops this shell company as kind of a workaround. Now, the issue with this is that, you know, these contracts could be deemed illegal at any time by the Chinese government. I don't have any sense, to be frank, how likely it is that would happen, that all of these investors who are investing in Alibaba through this VIE would suddenly lose all that value, right? The contracts would be deemed illegitimate, and U.S. investors in Alibaba would no longer, you know, have a stake in any kind of asset. But that's concerning to me, especially with the tensions, the trade tensions between the U.S. and China. China kind of coming into becoming the dominant world power. You know, Ray Dalio talks a lot about how the U.S. is kind of ending our cycle, in coming to the end of our cycle as the global power. So it's concerning. Now, so there's more to it. Watch the whole video if you're interested, but that's kind of the gist of it. There's this risk of, you know, not having an actual ownership stake in this Chinese company. As an investor, my whole thing is I want to own great businesses for the long run, right? That's really my path to financial freedom. Identify great long-term compounders and park my money there and let those businesses generate wealth for me. And a big part of that is owning the great businesses, right? Having a legal kind of ownership stake in the business where I can sleep at night knowing I own a piece of that pie. With Alibaba, you know, I can't really feel comfortable sleeping at night knowing that I own a piece of this business when I'm going through, you know, this Cayman Islands shell company to try to circumvent Chinese law. So that I'm not crazy about that. Now we each have to kind of assess that, depending on our risk tolerance, depending on how we see kind of the bigger picture. It seems like Alibaba is really becoming the Amazon of China. I ran some numbers on revenue growth. Okay, it's pretty impressive. Alibaba 35% revenue growth in the last 12 months. And you compare that to the FANG stocks plus Microsoft, and it's just incredible growth, guys. It's kind of like Amazon. I don't know how long ago, maybe 5 years ago. So Alibaba, I think it has a long way to run. My issue is not with the valuation aspect of Alibaba. It's with, do I feel comfortable that I'm an owner of this business for the next 10 years? And I don't feel comfortable. And I wish I knew, why Li Lu sold out of this. Maybe some of these risks he identified, and that was the reason he got out. I wish I had Li Lu's number. If any of you have that, let me know. Dalio is obviously, betting a significant stake on it in terms of real dollars. David Tepper reduced a third. He reduced a lot of positions. So, it's impossible to say, is he seeing something in Alibaba that's making him a little bit nervous, or is he just wanting to take money off the table kind of in a broad brush stroke because maybe he's making some kind of macro bet that we're going to get some bargain sales here soon. I just don't know. But so that's kind of where I'm at, guys. I think Alibaba is a great business. I think it has a long runway ahead. I'm just not comfortable with the risk of investing through an entity that appears to be trying to circumvent Chinese law. So that's where I'm at. I've decided to not invest personally in Alibaba at this time. I'm open to learning more about this and changing that perspective. I haven't totally written Alibaba off, but until I learn more about the situation with this variable interest entity, I'm going to put it on hold. So just wanted to share that. Is there anything else I wanted to say? Oh, yeah. So it's funny, when I made the last video about Alibaba, saying, I had this $216 target buy price, it's funny how many comments I got that said, hey, Alibaba is never going to go that low again. Get in now. It's obviously a great business. It's silly to know that it's a great business and to not be willing to pay up a little bit more for it. And I just want to point out, it did drop. It dropped to $212. We may have more dropping to go. We don't know. But I hope, those of you who responded in that way, with that kind of conviction that it's not going to drop again, there's a lesson in that. And for me, the lesson is, in the short term, we have no idea where stock prices are going. Predicting is so difficult in the short term. And so, I hope that encourages those of you who had such conviction about what was going to happen next to really kind of question, where is that coming from? Is that coming from a place of FOMO? You don't want to miss out if Alibaba does take off. It's a really important lesson and important to challenge what's underneath that having such conviction that a stock is only going to go up from here I see it with Bitcoin. I see it with Tesla. Nothing goes up forever. Okay. So, it's important to check yourself when you get emotional and you're riding that wave of this can only go up. It's going to go up forever. You forget to look at these investments through the lens of risk, through the lens of, okay, what could happen here that would cause me to lose money? Okay. Howard Marks talks so often about how, at certain points in the market cycle, we should be more aggressive. We can take more risk. And at certain stages of the market cycle, it's important to be cautious. Okay. Really put the focus on, okay, how do I protect the downside here? Versus, how do I ride the biggest wave at the bottom? And, I'm sure Howard Marks, he's been saying this for the last couple of years. Now is a time for caution. Okay. When everyone thinks something can only go up forever, when you've got, your Uber and Lyft drivers talking about what stocks they're buying on Robinhood, when everyone is getting into the game, that's a great sign that we're nearing the peak, right? Because it's just not a sustainable state for the market to be in. And, it kind of feels like we're somewhere around there. Now, I have no idea when the market's going to turn, or even, well, I know it will turn, but I have no idea when. So I'm not saying you should pull everything out and sit on the sidelines. That's probably silly as well, especially in this potentially higher inflationary environment that we're in, printing all this money, and with interest rates so low, right? We just got to be smart. We've got to collect all of the information that we can and make the best decision with that. And I've decided, collecting as much information as I have the last week on Alibaba, it's too hard at the moment. I need to sit on the sidelines and collect more information. So if any of you guys have information on, this VIE, the current, shell company in the the Cayman Islands, I'm curious to hear from you. I know I could also invest through the Hong Kong exchange, through my Interactive Brokers account. But still, as a U.S. investor, as a foreign investor, there could still be that risk where, I would be investing in Alibaba, kind of against Chinese law. So I need to learn more about that before I can do anything with Alibaba. So anyway, guys, I will leave it at that. Curious to hear from you. Let me know in the comments, and I will see you guys in the next video. Take care.